So here's the challenge. I opened a brand new account. I put $1,000 into it, and I'm going to turn this $1,000 into $10,000 and share every single trade on YouTube. But first, let's get a few basics out of the way. I will not be buying any shares. I will not be doing any penny stocks. I may or may not live stream some of these. I'm going to do these in videos. I will call out all the trades on the Discord. But these are just going to be, hey, here's the setup, here's what I was thinking for each trade, and the way I'd manage my risk with that trade. I do also want to mention that one of the big things here that I'm going to focus on is risk management for a small account. And you're going to notice that I manage my risk by the amount of money I put in my trade. I think about the amount of money I could lose, not always just about the amount of money that I could make. We need to factor those in. We're going to go through several different strategies as I go through this series in all likelihood. And one of the things that I think today, because I'm doing this after recording the stuff for the trades today, is I think I forced a trade that I didn't really need to force. And so I got a little excited about the new series. I wanted to make a trade and do a video as soon as the money got put into the account, but it's important to always remember that you don't have to make a trade. If nothing seems obvious, don't force it. Let the trades come to you. You know, I've made tens of thousands of trades at this point. I've been doing this for years and years and years, a decade now. So it was a really dumb mistake, one that I shouldn't have made, but I'm going to share it anyways because it's a good learning experience and you can take away, and the trade might work out. It wasn't necessarily a bad trade. It's just in a small account like this where every trade needs to matter, because remember, you lose 50% on a trade, you need to make well over that to make that money back. It's not like a 50% gain will then make up for a 50% loss. We're dealing with percentages, not just straight monetary amounts, right? And it's good to think in terms of percentages when you're talking about trading. One, because it will help you separate your emotions from those dollar amounts. So, you know, if your account climbs and you're already not managing a good $100 trade, well, you know, if we start adding zeros to that, it's going to get exponentially harder, and that you don't want that emotional tax because it could cause you to spiral into a bad pattern. So nonetheless, here's the rest of the video. Here's the trades I set up today, and I hope you enjoy this series. I will continue to make this series up until the 10K mark. There is no set time frame for this because I think that is a bad practice. And the point of this series is to show you, like, here's the good habits that you want to have. And setting time frames to make certain amount of money, it will just cause you to act in irrational ways, cause you to get panicked, and that will lead to losses in the market. So we're not going to do that. We're just going to do this series until the goal's accomplished. So we're going to go ahead and actually hop over to the market. And there's already a stock that I've been digging into, which is Uroy. This is a company that works in the uranium sector. However, they're not a miner or anything. They simply act as a bank for miners. So for most major banks, they won't give loans to the uranium mining companies. But so this is where this company steps in and they collect royalties back. So they give out this big loan, but then they slowly collect those royalties after they get the money back from the loan. Everything from there is profits. It's a pretty solid business model for what I think is going to be the next big thing to push the world forward, honestly. So this is going to be a fundamental play, not much charting on here, okay? Actually, this chart looks really weak. If I go to the daily, looks pretty weak here. Probably going to be a hard cut below $2 is what I'm going to look for an exit. And I want to give this time for the fundamentals to play out, because timing fundamentals can be really difficult. It's different than timing a chart with technical analysis. So I'm probably going to go for these April contracts. I'm probably going to buy these in the money. Reason being here is, what's going to be my delta on this? It's only a 0.18 delta. It's not really worth it. As a minimum, I'd like a 2.5 delta. So we'll probably go deep in the money here. Since we are deep in the money, we're in a small account. I'm probably going to only buy 2 of these. So we don't want the quantity of 10. And by the way, I'm a little slow on using Webull because I don't trade a lot in Webull. We're going to buy 2 of those. That's going to be the first trade set up. Now, one of the trades I wanted to do in here as well, right now we're on TradingView, by the way. Hey, link down in the description below if you want to try out TradingView. This is where I do all my charting. I don't like where this is at right now on the RSI. I want to set up a position in here, especially for this series. I think this is probably one of the best trades right now. On the main account, we are already in this trade with April expiration. So we're looking to come out all the way here. However, in the short term, I'm expecting another dip down. I'll be watching for that dip down for this RSI to come. I'd like it at the $50 range, right about there, before I enter back in that position. I think what we're going to do here is actually a pair trade into that news tomorrow. So let's go for a weekly. Why do not need to see this many strikes. Weekly, that's going to be too much capital. We're going to take more risk for this, right? We're looking to swing. 390. 21 delta is a little less than we want, but these are going to move fast. So let's see if I'm spending 86 there. Let's just take a look at IWM real quick, because I think I want to do a pair trade setup. We can only buy weeklies on these, which is fine. I'd like to be a little bit longer on these. 200. Still got a 2.21 delta, spending 100. So I'll still be favored on the bullish side. 21 delta. Yeah. Let's take another look at our chart. We're seeing here. Come down, support. 74, we won't want to hold to that though. It's like this is our target range, the 78. Will be the hard stomp out. Coming in here, go to our 1 minute on the SPY. Nice little bounce there. Okay, we can set this up. So let's set up the SPY first, because I want the bullet bearish side. We'll go to our options. Look for my go to the right strike. It did not save my strike what I was looking at. Should played in this more. Doesn't really matter. Buy one put to swing. And then we'll go to our IWM. And the thought here is that I think a lot of the international issues are going to be heavily weighing down on these larger companies that have international exposure, but domestic companies with the U.S. economy doing a lot better, I think will do a lot better. And you're going to find those domestic companies in IWM. So we're going to go here. We actually want the 16th. And what was I looking at? The 200. We have to push so far out. 187. Good thing is I don't really have to worry about open interest right now because we're in such a small count. So 70 to 78 cut. So if I'm taking a 21 delta, $40 loss, $40 risk, it's about 40% risk heading into that. So let's actually push it here because I'm expecting a short-term downturn, right? And I want to be able to make money on that put on the short side and then hopefully make money on the other side around on this. So we're looking at potential $34 loss, 50% loss if we head to 78. So it's actually going to be, you remember, as the delta climbs, your gamma is going to climb, right? So it's going to be about like a $40 loss, $75 contract, which would correlate to a $48 gain. So this is a good pair right here. So I'm going to buy this, buy one of these for IWM. Buy side, we'll send that in. And we'll let that play out. Just going really small because there's nothing big on this market. Remember with the big TLT trade that I want to go to, Coinbase is going to be a big money maker. We want those set up for those big plays. And right now this is a very speculative play, and I'm going to cut myself off because that's one of the things we already talked about at the beginning of the video. One of the things I also want to cover is a lot of these starting positions are really small, right? So one of the things I hope to accomplish over this series is to teach people how to play more into their winners, how to make sure they're exiting out of their losers. Remember, there's only 5 different kinds of trades, right? Big losses, break evens, big, small wins, and big wins. So that's it, right? All you really need to do to be profitable is to cut out those big losses, all right? Don't overcomplicate it. And I know that's a little too simplistic and hard to actually execute, but I'm hoping that over this series, I'll be able to, be a good example of what that looks like and help people on their own journeys as well. And that's gonna be it for this video. Hope you enjoyed. Leave a comment down below if there's anything else you want me to cover when I'm doing these videos, any other details you want. And leave a like on the video if you want me to live stream this in the morning. If there's at least 10 likes, I'll go live when we're managing the count in the morning. I hope you enjoyed this episode, and I'll see you in the next one.